Okay, welcome everybody to this evening's ACY Securities webinar. Tonight's webinar is live Forex market review, identifying high probability trading levels. So that's tonight's webinar. Just to give you a heads up, after this webinar at 7 p.m, we do have another webinar called the Quick Start webinar. Myself and Nathan will be running that one between the two of us. So if you have the time and you would like to maybe have a look at another strategy, it's called the Quick Start strategy based on the 1 hour chart in line with the day chart trend, then that is coming up at 8. More than welcome to attend. You just need to go to the webinar page and register, and I'll have a link that I can put in the chat for you as well. So that's what's coming up tonight. So we'll get into tonight's webinar first of all. Let me just get control of my PowerPoint. All right, so my risk disclaimer, if you could all read through that. If you're on our YouTube live stream, I cannot see the chat, so you're more than welcome to watch on our YouTube live stream, but I've given you a link there so you can register and come into the webinar if you wish. For those in the webinar, I've got the webinar chat open, or the question and answer box open as well. So any questions as we're moving along, just type in. So everybody, please read through the disclaimer before we move along. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time Forex trader. I've been trading the Forex market now for more than 15 years and mentoring for more than 10. If you want to contact me by email, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me on our website. Go to acy.com, go to the Market News tab, or our YouTube channel, ACY Securities Australia, find my analysis there. And I do put my analysis through Twitter and LinkedIn on my handles there. You can connect with me on those handles too if you wish. And through the week, our analysis is getting put through our Telegram channel. So if you want to get access on the fly in our Telegram, then just contact Nathan. He can give you access to that. If you want to get access to my chartlettes and templates as well for MT4, just contact Nathan and he will hook you up on that too. So I'll put his details in the chat. As well, if you need help getting set up with a demo account or you have questions about opening a live account, just contact Nathan. He can help you with everything. All right, that's in the chat there, his contact details. All right, let's get into the analysis then. First up, as always, we'll have a look at the news coming out that can affect the market today and into tomorrow. So we do have the US unemployment claims coming out. Generally, over the last month, they have been upticking a little bit. Lindelini, you're asking what the name of the Telegram channel is. You won't be able to access it without talking to Nathan, so there's no point in me giving you the name. You can't look it up, I don't think. You'll have to talk to Nathan to get access. It's a private channel, okay? So without being given access, I don't think you can get access to it. I don't think you can just look it up in Telegram. So just contact Nathan. He will be able to assist you there. All right. So on the news front, the US, we have the unemployment claims coming out. It's a bit of a lighter week this week for news, not much more coming in for the rest of the week. And then the big one that the market will be looking towards, and the market is a little bit, it's lost its very aggressive move against the US dollar of last week. And just reading the chat, some more things are coming in. Okay, that's great. Thanks, Lindelini. Hopefully I'm pronouncing your name right. So next week, the big one that the market is starting to work towards is Thursday early morning. We have the US interest rate decision. And they are expecting that 25 basis point rise. Even though inflation has been dropping, last week's inflationary figures considerably dropped. So I wasn't potentially looking that we would get an interest rate hike, but they're forecasting a potential hike there still. So the market may well be starting to just slow down its move against the US dollar. Treading water as we head towards Thursday. So it's worth knowing what is coming out over the next week all the time. So if you start to see the market just starting to slow down a little bit, that's why, because there's a certain news announcement coming out. So the last big one for the month is the US FOMC statement there. Okay. All right, let's get into the charts. We'll first of all look at the dollar index. So we're having a little bit of a pullback of last week's move. So go to the weekly chart, you can see we have put in a new low for the week, but we are within the week of last week. And I would be looking for, just monitoring the dollar index, that we, if we're going to continue this very aggressive move down, we really shouldn't move back above broken support. And that's at 100.82. All right. So we've been seeing a very negative move down on the dollar index there on the weekly. You see there on the day, we're just having a move back up. So I'll be watching these lows through this area here for potential resistance now for a lower top to form to move down. On the opposite with the S&P 500 daily, whilst we're monitoring for a pullback, we keep moving up. So, it's at very high levels here. We're about at least half a dozen days up there. So I would be waiting for a pullback, monitoring for a 62 to 79% pullback if you want to be a buyer on the index at the moment. It doesn't make good sense as a trader to be buying at the top of the market. You want to look for a dip. 62% level lines up perfectly with these old tops here, around about 44.56, assuming that that's where the market tops. So if this keeps moving up, I will just keep dragging my fib up. All right, so very bullish at the moment. Looking for a dip there of sorts. That would be the way to go. All right, let's get into, starting with, we might start with the EUROPAs. Euro dollar. Now, we just pull back to actually what is now weekly support, 111.85. So if you go to your weekly chart, last week we moved above this high, 111.85. Broken resistance becomes support. And it's just in a little bit of a area of resistance. There's a weekly resistance here at 112.21. And if you look left, there's actually an old monthly top over here. If you go to your monthly chart, you'll see it. It's actually just there. And there's more resistance here too. But that area just there is this area just there at 112.39. It's an old monthly top. And you might think that top over there from back in time, 2019, won't have anything to do with price action right now, but it is holding price action. It's worth understanding where the most current monthly top is relevant to where price is standing from a historical point of view. So this is in an uptrend, but we may need a little bit of pullback. In a perfect world, looking for the next major setup on the euro dollar would be looking for a pullback to 110.95. Now, whether or not that's going to come around the corner, I don't know, but that is definitely what I'm looking for. This hasn't had much of a pullback yet. It's actually stuck between weekly support and weekly resistance here. 111.85 up to 122. So 111.85 up to 112.21. So there's only, 36 pips worth of distance between weekly support, weekly resistance. So the market's just trapped in that little area at the moment. As I said, some of these pairs are just starting to slow down and consolidate a little bit. Maybe we need a bit more of a corrective move down than just one day. I'm not really interested in trading the corrective move down and be much more prepared just to sit on the sidelines and wait for a pullback to an area where I'd like to maybe be a buyer in line with this trend that's starting to unfold against the US dollar. So that would be down here on weekly support. Of course, to get down there, it's going to have to trade down 100 pips. So you might want to look to trade it if you really want to. I can see here on the 4-hour chart that we've in a 4-hour downtrend, and this rally back at the moment is filling at 79% level. So if you're prepared to go counter trends, then really you should have been looking up here at 79% level. What I'm definitely seeing now, even though that 4-hour trend is down here at the moment, lower top, lower bottom, coming up for a rally, I get rid of that fib. What I'm definitely noticing as I look at a 50-minute chart, and I've got my figure in here, 112. 112 is offering support here. We've dropped below, came back above here, became support. So 112 could be support. It's definitely support there twice over the last hour to 2 hours. So, you know, trend is up. Whilst I would like a deeper dip down to the 110.95 level, approximate 111 level, this is really getting support at 112. So you just need to make your decision. Are you prepared to be a trader at higher levels? So there at the moment, 112 is offering support. You can see yesterday 111.85 weekly support offered support. So we're moving down to some support areas on the day. You know, getting a trend line break as I'm talking. Is this, are you happy enough to trade at such a high level to trade at? All right, there's not a lot of room though to weekly resistance. That's the only problem at the moment. It's holding on weekly support and it's trapped at weekly resistance. So it is a little bit of a narrow area. I mean, you could be trading here to the long side with the idea you're going to break above resistance. But personally for me, I would much prefer to have a good distance from where I'm entering to my strong resistance level. And that doesn't there offer that for you. So it's not the perfect area, but you know, intraday at the moment, if we want to ask ourselves where support's coming in, it is coming in at 112 at the moment. And a lower level, which would give you more room to trade up to weekly resistance, is down here at 111.85. So if we got down to 111.85 today and held, started to turn around, or you can get in close to that area, that would at least then offer you more room to trade up to 112.21 for the possibility of a break above. Then you've got 112.39 monthly resistance to contend with. You can see there yesterday how relevant it was yesterday. Yesterday's high came in at 112.39. So the market is respecting these high levels of resistance at the moment. So just, you know, it's a question of looking for a good setup that's got room for you to trade in, and you're not trading straight into resistance. So trading up from 111.85 would be a better area than looking for this potential intraday reversal here at 112. Okay. But in an ideal world, as I was saying, if you're like me, I'm always able to wait and look for the better level to trade from. The much better level to trade from would be at 110.95, that broken area here. All right, now whether we can get down there over the next week, we'll have to wait and see. Maybe it'll come down there after the FOMC statement. We'll wait and see, but that is a much better area to trade from. Gives you much more room to trade up from to then challenge these resistance levels that are holding the market at the moment. Okay. Now the euro yen, if we have a look at the weekly chart here, we're actually having a week up, 2 weeks down, starting to once more maybe head north. Very strong trend up here on the weekly chart. All right. And we're just, this line here is a daily area of resistance at the moment. So that's the only barrier at the moment in the way of price moving up to challenge the current high point at 157.99. So it's not in the best place at the moment. And, you know, if I go back to the weekly chart, we have a week down last week, a week up this week. You know, the overall range here, we haven't pulled back to a 62% area yet. It's been a very shallow pullback. Maybe we need a deeper pullback. And if that's the case, let me just put that fib back on. Just put it to the side, so when we're on the day chart, you know, we've only pulled back to 38% level at the moment. Be nice if you pull back to 151.60, which is a weekly high. That would be a great area to really start to focus on maybe getting to the long side if we came back down to that level. So we've had a move down here. This day trend is down. So if you want to align yourself with the day chart trend, which is going against that weekly chart trend, we're at a 79% level yesterday. Today, you know, we rejected day resistance, and today we can't quite get up to resistance. So maybe we are holding here to trade down in line with the daily. It is a difficult area at the moment. 4-hour trend is up, day chart trend is down. Which way do we go? If there's a total conflict of trends on the pair that you're looking at, you don't have to do anything. All right, but if you want a rule, I would look to the day chart and ask yourself, what's the day chart telling you? And if you need some clarification that maybe a top is coming in here, wait for a day down first of all. So I'm in the mind that I would probably wait to see what today's candle brings. If we can't get above 156.68 today and we have a negative candle today, that would put myself much more on the idea that we're probably trading back down the range. All right, so if I have confusion, I don't have to make a decision on the pair. So I would much prefer to see what today brings. Yesterday we rejected. Do we further reject 156.68 today? If we do, 2 days of rejecting up there would probably mean that maybe we are going to head down the range. So you can give it another day to wait. Let's say that day trend could be putting in a lower top here. The 4-hour trend is up. All right, it's 4-hour candles are sitting on top of these old highs to the left. But if you traded right now to the long side, you're potentially trading into, or you're asking the market for you to be profitable to trade above the daily resistance level at 156.68. And the market might not want to do that. So, and we're also, seeing a possible fail at 79% level there too. So it's not presenting very clearly here at the moment. And most of the trading day today is holding at the central pivot point or below. So there's actually much more of a negative bias intraday as I look on the 15-minute chart. But it is, you can see as you get into the 15-minute chart, price action is getting support across here. And it's finding resistance across here. So, as you break it down into a lower time frame, that's all the market's doing at the moment. So if you want to trade the pair, you should be looking to buy up from the bottom of the range and sell down from the top of that 15-minute range that's there at the moment, because that's ultimately, as we break it down, what the market's doing. So I'd be waiting for another day to come around and see if it gives a clear signal about does it want to break north or south. Okay, Euro pound's been very strong. Just want to drop to the weekly chart. We've been getting support from over here, weekly support and monthly support, 85.65 and 85.47. I know some of you have been long the euro pound because I've heard somebody in the webinars told me that they were long, as you told me, and I know of somebody else from talking to the office has been long too, making money on the euro pound. So we're actually above weekly resistance here at the moment, and the next stumbling block for this pair moving up at the moment is 87.21. This area through here. Monthly resistance at 87.21. I think weekly resistance is at 87.18 from memory, just there. All right, so I would actually have my weekly level increase to the lower level to reference. Just there. That's the monthly level. That's the weekly level. All right, so this is very much overextended, but in an uptrend. As a trader, we are, I can see that we've broken above the weekly resistance high and we've formed some form of support on top of it today. Rejected it yesterday, forming on top of it today. Personally, it's very overextended. We've already had 4 or 5 days up. And, we've moved up. $128 pips. There's only 2 weekly resistance at the moment, and monthly resistance is only 40 pips. There's not a lot of room left there to trade up to the upside with the trend that we're seeing. So that doesn't look, high probability to try and trade north at the moment. What I would be looking at the moment is if we do continue to trade up and get up to 87.18, what happens there? Do you start to see a reversal? That would be what I would be looking for at the moment. Or what we might see at the moment is a continuation of trend, but first of all, we would need to see A retracement against the trend. You've got day support here, 85, 84, and 62% retracement. So this is very much at the top of the move. If it gets up to weekly resistance, you could look to trade down from there. Otherwise, I would just be looking for, the weekly trend's just turned up on that day chart structure now. It's very strong. Let it offer a pullback and then assess and look to see if you can get in to the upside after the pullback's occurred. That's what I'll be looking for there on the euro pound at the moment. So just sitting on my hands, I'm watching that one. Let's have a look at the pound dollar. All right, now we was watching, put it out on Telegram yesterday, I was watching the 130 level, but the CPI data dropped it through there. So now I'm watching the lower level that I was discussing on Telegram, 128.48. Been a bit short of that level. That level I'm discussing is a weekly level of broken resistance here. Now we may not get down there. Yesterday's drop may, and the bottom that we had yesterday may have already bottomed. It may not want to get down to that level, but if you draw a fib from this weekly low to high to your day chart now, then we've had about a 50% retracement, but it'd be nice if it could just dip down to the 62 level, which is at 120.80, and then come back above and hold at 128.48. All right, I'm more inclined just to watch the weekly level rather than 62% fib, but we all know what happens with fibs. We generally pull back to 62 or the 79. So, stabbing down close to 62 and then wanting to get support at 128.48 would be ideal. Because if we get that sort of price structure movement back, then I would anticipate that maybe we could bottom out here and then see the next longer term move up. All right, so at the moment we're just correcting the last move up, which was occurred last week. We're just correcting back down, not seeing a trend change here. So I'm just monitoring at the moment where's the bottom coming in. All right, just putting in the lower top here on the 4 hour. So at the moment I will just be simply watching down. I'm just watching down here. I'm not looking to trade down. I'm just watching to see where the bottom's coming in. I'm only interested in trading what I'm seeing, versus the US dollar, which is a strong trend against the US dollar at the moment. So, and I might have to wait till the FMC statement comes out to get clear clarity about where this pound dollar is bottoming out at. And the other thing I was monitoring, I had a fib drawn across last week's low to high and the 79% of last week's range. So a little bit different perspective on fibs here. Is this 79% level here at 128.33. So that works better than the 62% level of the larger range from here to there. It's much tighter to that broken resistance level becoming support. So 128.48 down to 128.33. If we can get down into that area, the US news tonight might drive it down to there. That would be an area I'll be watching for a reversal. All right, so a lot of what I'm doing at the moment is just watching, trying to structure something for a long-term trade at the moment to the upside in line with that US dollar weakness that we've been seeing. All right, pound yen. Now we have actually dipped below 180.41 at the moment. It's been offering support, but we are getting below it. So to my day chart, been watching this 180.41 level. It actually comes from the monthly chart, which is this area over here. Now at the moment we are just drifting below, and maybe the market wants to move below that level at the moment and have a deeper move down. We've had from a weekly perspective, that's where the last significant low came in. And if we are doing our fib work and looking for a normal retracement, we would get a much deeper pullback than what we're having at the moment. A pullback in the normal sense would be down here, or at least to this significant high here that we've moved above. So we're a long way away from there. Now, at the moment, we had a rejection candle last week, closing back above the monthly level of support. All right. And we know how strong the pound yen's been. But of course, the pound dropped yesterday in the face of the CPI data. So it's a little bit of a difficult one at the moment. How deep a move down is this going to have? It is putting in a lower top. Are we going to see a break of 179.46 for a move down? A much more, move down. There is an imbalance. This very impulsive move up through here may need to be filled. Okay, but then if you're going to trade to the short side, how do you get in? If you wanted to trade to the short side, your best opportunity was up here and your daily resistance. Now, of course, we're nowhere near that at the moment. We're actually trying to move below 180.41. So it keeps trading below 180.41 and then moving back above it. So just trading short just below there, I don't think it's the wisest thing, because a lot of the time we just move back above once we're underneath there. So it's not easy, this pair at the moment. If you want to try and hold yourself in line with the bigger dominant trend, that is actually up, but it's just weakening down at the moment. So we could be seeing a move down. So, strategizing at the moment, be nice just to see a clear break below here, 179.46, and then we get away from the 180.41 level. And then, if you want to trade to the short side, so if we break 179.46 quite clearly, then I would start to think maybe we're going to get a 62% retracement of the weekly range, or at least fill this imbalance. So I've just been monitoring on my 4-hour chart what is price doing, but get a clear break below 179.46, and then you can look for a rally back to that level, and then look to try and structure some kind of short to the downside. All right. If today we simply, you can monitor the 4-hour chart, but if we get a 4-hour candle that just simply closes back above 180.41, we're probably heading back up to 182.12. All right. So then you can look to structure something to trade to the upside. All right. Johannes, you're talking about the BOJ news. The BOJ news. Well, when is the BOJ news? That would be a good question. All right, so the BOJ news isn't until next Friday, so we're a week away at the moment. So, if you want to wait a week before you trade a yen pair, of course, what comes out from the BOJ will drive the yen pairs up or down. Over the recent monetary policy statements from the BOJ, it hasn't really affected the yen pairs too much because nothing's really changed. But I mean, we're a week away at the moment from the Bank of Japan doing its monetary policy. So there's plenty of time to structure some form of trade. And Edwin, you're saying you're looking at 180.41 for an entry yesterday for a break and retest. So you're looking to the short side. I mean, we could look here for a move down today and a retest of 180.41 tomorrow. I just don't like this 180.41 level. It seems to be more support than resistance at the moment. We've been able to spend a little bit of time below it last week, and then we came back above and it became support. It's been support all week. I know we're below it at the moment, but if the US news comes out today and it's drives the pound yen up, then 180.41 could be offering support once more. So it's just a very difficult area in my mind to get short just where we're at. But I mean, today you could get rid of my lines. You could be looking later in the day to play 180.41 as resistance off the 15-minute chart. If you see a nice little rejection down from it on the 15, you can see today once, twice, three times at the moment through this area. The market's getting capped at 180.41. So maybe the market's flipping there at the moment, but you could look for another rally up to that area and then trade down if you're now leaning to the bias to the downside. All right, so pound yen, pound dollar. We've covered that one already. I mean, if this keeps leaning to the downside, then the pound yen may well lean to the downside too. There's still, there's still getting to that level that I'm watching. There's still a good 60 pips to move down to that area. So that could drag on the pound yen too. All right. All right, let's get into the Aussie yen. Now we're forming a high bottom here on the daily. That pullback last week. Last week's pullback was just short of weekly support. I'm kind of anticipating that we're putting in a bottom here to move up. A bit of an expectation that we may get after today's job figures, which were very positive. An expectation from the RBA now is maybe they're going to raise interest rates. That would be in, what would it be? Let's just have a look. Not sure if it's on the 1st or the 8th of the month. You'll have to check the calendar. Right, it's going to be the 1st of the month, 1st of August. So market may well start to anticipate an interest rate hike there. As I was saying on that weekly chart here, this could be a high bottom forming on weekly support. Rejection candle last week, and we've been trading back down inside the rejection and rejecting once more this week at the moment, with a high bottom forming on the daily here. So, if we start to structurally form an uptrend here, looking for some form of a dip to get long, I think. In fact, you've already, with that rejection candle last week, if you drew a fib across the range of last week, the 4-hour chart, there's last week's. Well, there's last week's high, but that was the high point on the daily there. Putting a fib across that range, we've almost sunk down to 79% into the depths of last week's candle. Might actually just put the fib on last week's high so you can see. We retraced down almost 79% within the rejection of last week's candle. So when you see price moving down to a clear support level, back to the weekly, see that rejection candle, we'll often trade down inside that candle to the 79% level and then trade back up. That's what we're doing. All right, so back to the 4-hour. That's the range of last week. And I need to draw that the opposite way. So monitoring the range of last week, you can see we pulled back down to close to 79. Potentially this week we're moving up to the 127 up here. So what I would actually be looking for, just trying to structure the best entry depending on what price does for the rest of the week. We could be now moving up to the 127 this week. All right, and then that would be potentially the range for this week. And then what you could look for next week, assuming that's what we do, let's say we go from this low up to around about there this week. Then you could monitor some form of pullback into the new week, like pulling back to the 62% of the range we're forming for this week, to look for a move up next week to higher levels. All right, that's what I'll be looking for. All right. So price will need to move up a little bit at the moment and then have a corrective pullback and then look for the next move up. All right, at the moment, right where it is, we're actually at daily resistance. So if I was looking for an opportunity to get long, I'm at resistance at the moment, just trying to move above 95.15. And then we've got weekly resistance at 95.73. So buying a healthy dip would be ideal. And you might need to wait till next week to see that healthy dip, or at least structure your fib across the current 4-hour uptrend. All right, wherever that might finish. Let's say it finishes here because that's where I can draw it to at the moment. And then look for a dip to the 62.79 and then try and structure something to the upside. All right. It does look like we may, that dip down last week could be the low point. We may have bottomed out this week here. So now 4-hour uptrend, look for a pullback to continue up. All right. To the Aussie dollar. All right. Early in the week, I was looking for support to come in at 68.18 to 8.05. I actually got long at 68 and weathered a bit of a dip, showing some profit at the moment. Now on the weekly, we moved to a higher top, higher bottom. We're just asking the market, from last week into this week at the moment. We haven't been up to challenge last week's high yet, but the market's asking itself, can we move above 68.99? A definite structural formation here, a higher bottom and a higher top. It's just a question of, are we moving upwards in line? We had a very strong move up. We've had a corrective pullback to approximately 62%. Are we now moving up through these resistance levels? All right, nice day up today. So it'd be good if this could close above 60 at 18 today, but I would be looking at the moment, any pullback, hopefully get support at 68.05 down to 6800. All right, for the buyers to be in control. All right, we have actually turned into an uptrend on the 4-hour chart. So, just monitor the fib. This might go up a little bit higher yet, but then look for a pullback within the fib. And you can see already we've had a dip down today, back down to 68.05 on the 4-hour candle. That's rejected. So clearly support's coming in now at 68.05. That would have been a great level to watch today if you weren't already long for a pullback. All right, this might not offer any more of a pullback. It may just continue up. But, back to my 4-hour. I will be monitoring the 4-hour range at the moment for a pullback, wherever that might come. And it may mean it pulls back below 68, but this is at the top of the 4-hour run at the moment. So without using a fib tool to come up with a level, I will be simply watching 68.04, which has already been tagged today as support. So on the 50-minute chart, when the news comes out later, it may well drop back down to 68.05. So the area I will be watching is 68.05, 6800 for support at the moment. All right, depending what the US news does bring, you could be monitoring the fib range from the low down here of yesterday up to the current high of today. And, 62% retracement to the central pivot point could offer good, strong support today, intraday, for a move back up. All right, so 2 areas to watch. Of course, here we're at the top of the move for the day. I'm never looking to be buying at the top of a move. I always have to look at some kind of pullback to a very obvious area where support might want to come in at. All right, don't get caught at the top of a move. And if you're in the lesson on today's projected high or low yesterday, we're almost at today's projected high. This upward move before the selling pressure started to come in within the red zone of the pivots was, I measure it, selling pressure is coming in. Within 2 pips or so of today's projected high. All right, I've got to keep motoring. I'm just looking at the time. I have to finish at 7:50, so I want to get through the pairs that we cover. All right, so look for a pullback. New Zealand yen. It's a little bit messy in here for sure. All right, so a 79% pullback here of what was last week's rejection candle, very much like the Aussie yen. All right. Lots of support and resistance in the way of this moving up and down here at the moment. But the key, I'm just going to get rid of the minor levels that I've got drawn in at the moment. We're holding above weekly support here. So if you want to get to look into long side, with the overall trend here on the weekly chart being up, it tries to negotiate this monthly resistance level here. It's getting support on that weekly top. So if it can dip down to weekly support once more, that would be a good level to watch. for an opportunity to trade up from weekly supports. That's where support's coming in. And then if you're trading up from there, the level that's holding as resistance is the monthly high over here. That's the danger for the trade to move further up. All right. So on the 15-minute chart, I would be watching the 87.30 level, which I just want to double reference. It is that, yep, 87.30, that weekly high today. Any dips, what happens at 87.30? Does it offer support today to continue moving up? All right. New Zealand dollar. Put this out on Telegram today. I was looking at the area of 62% retracement and the 62.47 day support level. So on the day chart, fib drawn from low to high. We've had a nice pullback, holding the trend, holding up the top of this day chart top, 62.47, just dipped down to the 62 level. And once I put this out on Telegram, the market just shot north after the Aussie interest rate, Aussie unemployment rate decision figures coming out today. So that was a little bit unfortunate, but at the moment on the 4-hour chart, we're just headbutting into day resistance at 63.05. And this is the area I was looking for support today. Now we could still pull back. If you draw a fib from low to high on the 4-hour chart, you're going to see that the 79% level overlaps in that area that I'm watching. All right, so that's the range from yesterday's low up to today's high. All right, don't forget the day chart trend is up, so I will be looking for an opportunity to trade. And this is the level that I highlighted earlier in the day, 62.47 down to 62% level of the day chart range. Of this range from low to high, the 79% levels in the middle of this area at 62.43. So if we do get a dip off after the US news, this is the area to watch. This is the maximum area where opportunity for the buyers. All right, try to move below it yesterday. Once, twice, 3 times, it tried to move above, and then we've moved up. So the buyers will be definitely watching down here. This is the most opportune area to look for a buy if it comes down. At the moment, it is holding at day resistance at 63.05. So you don't want to be buying anywhere close to there because that's offering resistance, and the market at the moment is not prepared to move above. So you want to try and buy low for the opportunity of the market breaking above 63.05, okay, to head further up in line with the day chart trend. So this is the area I'm watching down there, 62.47 down to 62.38. All right, dollar CAD. Now we've been continuing moving down. On Tuesday, I said watch for the area of 132.23 to 132.62, weekly, monthly resistance to holders, resistance to move down. That was the area you needed to look to trade in this week. Now you're at day supports. So trading in line with the trend, you don't want to be selling in support. So you need to look for some form of rally at the moment, not too close to support. All right, so day support's at 31.16, weekly support's at 30.78. All right, so the most opportune time is probably gone for this week. If we can get a movement back up, you monitor the 4-hour chart range here. You can monitor that. Just have to be very careful that you're not trading too close to support. You can monitor that range at the moment and look for a rally back up to 62 level here. Overlaps with these areas of broken 4-hour support. All right. So let's just drop that onto a 15. And 62% level. So let's say the market does bottom there and starts to trade up. The 62 level overlaps nicely with, or close to anyway, the central pivot. Central pivot point today is at 131.70. You've got this 4-hour broken support area over here. All right, so that would be the area to watch. 131.61 up to the 62 level. 66. And if it really wanted to get going, you could come up to the central pivot. So that this area here would be the optimum area to look for a short. Don't be short in the bottom of the move. We're getting very close to day support at the moment. The optimum time was, 2 days ago. What are we? Thursday, Wednesday. So on Tuesday, I said watch 132.23 up to monthly resistance. You can see there very large railroad tracks on the 15-minute chart. And we've been moving down ever since. So, will it offer you a friendly rally? You've already missed the best opportunity of the week. And once you've missed the best opportunity offer, you just have to wait for the next major opportunity to set up. Okay. All right, gold. Not sure I'm going to get to I'll have a quick look at the ones you want to look if I have time, Azu, but I don't think much has changed because we went through those on Tuesday. Gold at the moment, to the day chart here. Put in a further higher bottom, breaking above weekly resistance at 1959. All right. Breaking back above here. Heading back up on the weekly chart in an uptrend now. In an uptrend on the day chart. If we can get a healthy corrective move over a day or two, this is the area to watch. Now that we've broken above 1959, watch it to become support for a continued move up. All right, that was the last significant pullback just here. That's the current high. 62 levels at 1961, weekly supports at 1959. That would be the area to monitor for a pullback if we can offer it you. Again, as my normal commentary would be, we can all see this is moving up and it may just keep moving up for the day and into tomorrow as well. But, do you want to be a buyer at the high of the move? Or do you want to wait for a nice corrective dip, 1 or 2 days, and then look to structure something to the upside? Can we pull back to weekly supports? We're just broken above all these tops to the left here on the 4-hour chart, which are these tops on the daily chart here. So we might then pull back to support to move higher. That's what I'll be monitoring there. Okay, on gold. And Azu, I will quickly look at the CAD yen. All right, nothing much has changed on the CAD yen, has it? I think we were discussing, well, something has changed. We were discussing the other day, I believe, this holding maybe at the 79% level in conjunction with that area there. Now, we did dip down, but of course, we've moved above the 104.87 level, which is this daily support area. I think my commentary to you was, if we close below that level, that wouldn't be good for the market moving up, but of course it hasn't closed below, it's closed above. So now this is looking much more supportive. The key level in the way of it moving up, as I discussed on Tuesday, is 106.50, which is, just trying to remember where we got that level from. 106.50 is that monthly high there. So that's the next stumbling block for the upward move. I think you were long from memory, is if it doesn't want to get above that level, if you are long still, price might want to hold there to move down. All right. So at the moment, next stumbling block is that 79% retracement level and that monthly high. What is going to happen there? You've had 3 very positive days, so it might break above there, but if it comes up and rejects and closes below, we may be putting in a lower top there. All right, that's my alarm telling me I need to wrap up. All right, and the NASDAQ, nothing much changing on the NASDAQ. We're just having a day down. If you're wanting to look to trade with a trend, I'll be monitoring a pullback on the fib tool at the moment. 62 level overlaps nicely with what is strong support here. Broken resistance being support. That would be the buy area to watch for reversal. Around about 15313 down to 15264. All right, no change of trend there. It's just corrective. All right, everybody. As you're talking to me about hidden divergence on gold, I'll just have to take your word for it. And I don't have time to look at it now because I have to get ready for the next webinar. Maybe if you want to bring that back up with me on Tuesday, we can have a look at that in more detail. And I just want to make sure anybody else has asked me a question. Okay, I think I've got everybody's questions. All right, and I'm just looking at your gold question now. So he's talking about the 2000, 2060 level. So you're saying on gold that, I'm assuming you're saying if we get back up to the 2000 level, 2060 level, we could then move back down. Well, there's a long way to go to get up to that at the moment. I think at the moment, the bias is to focus on where does this uptrend move to? Of course, yes, if we move up to this high level up here, this may be right for a short up here because we failed up there 3 times. But at the moment, it's looking like we're heading back up towards that area. So I think to the long side is the key. And then, yes, if we can get up to resistance, is there an opportunity to short? Linda Lani, we've got the quick start webinar coming up in less than 10 minutes. I have to go, but here's the link to register for it if you want to come and attend the quick start webinar, where we're taking you through a very quick strategy that you can get moving on board with. So the link for that is here. Or you can just go to the webinar page to register. Slav, thanks very much. You too, have a great weekend. Okay, everybody, I'm gonna have to leave you there. If you have the time, then you can come and enjoy my company and Nathan's company in the quick start webinar. We'll be taking you through a 1-hour strategy that you can get going very quickly with. Nathan will be more than happy to set you up with the charts for that. So with that in mind, if you want to move forward to that, I will see you there. Other than that, the next analysis is coming up on next Tuesday at 7 o'clock. I will see you there for that one. Okay, thanks everybody. Have a great weekend if I don't see you in the next webinar.